All right, welcome to the weekend video. This is Enda here from bullwaves.org, and I just wanted to start tonight by showing you the product that I do nightly on the website bullwaves.org. This is the nightly update. This is from last night. I usually give some opening comments. I give the charts. I give the hourly, 4-hour, and daily to show you where we're standing, and I give you comments on the short-term, usually the short-term charts. But anyway, so you can get it. You see, the product that I actually do every night is pretty concise. I like it. Lots of people like it. Maybe you should come and join the website, and maybe you like it too. But anyway, I just wanted to give you a rundown of exactly what I do every night. So there you go. You've seen what it is. It's not a mystery anymore. Let's move on to the actual markets. Okay. I think I've just lost my internet connection, but anyway, so be it. I think I can do the charts anyway. I hope you're all well. I'm back for another week. I didn't die. I'm here. I said that I would do a video if I was alive, so here I am. I'm living up to my. I'm living up to my. What do you call it? I'm living up to what I said. My promise. So here we are. This is euro dollar. You know that I've been wanting to see a B wave high, and we broke to a new high. Well, I think this is an expanded flat anyway, but I think I'm pretty certain that this is an expanded flat wave too. I think we've got a B wave top coming. If not, if it's not already in place, I think it probably is in place. But I just wanted to show you the 4-hour chart to see where this actually stands right now. So we did break. We pipped out to a new high above wave 1. Wave C of 2 is yet to come. I think it's actually probably going to be more severe now that the market seems to have, but upside momentum is pretty dead over the last, what am I saying, 2 months. We did pip to a new high, but all we've done is just, decline, retrace. I think an impulsive decline is coming now, and we're probably going to look back towards lower targets rather than, the minimum expected target. So minimum expected would be a break of wave A, so that would be 105. I think we'll probably go towards 102, 101 now, with a nice impulsive 5-wave decline in wave C. So we'll go to the short-term chart. You can see this is the B wave structure that I'm working with right now. Rally up in wave A. That's probably 3 up in a B wave, small B wave here, and then 1, 2, 3, 4, 5, something like that. So the internal structure here of wave A is, could probably take your pick, but overall the pattern has not turned out impulsive. So I think it's still corrective. We broke to a new high, but it's still corrective in a B wave, 3 waves up, ending diagonal possibility in wave C of B, turning down, but no break of support yet. The break of support will tell that wave C is underway. So 107.13 is the main level to look at. In the short term, break of wave 4 here at 108.30. That'll definitely be a nice indicator to suggest that wave C has begun. But so looking for wave 1 of C early next week. So wave 1 should break below 107.13. Okay, let's move on. This is cable. Again, searching for that B wave top. Has not happened just yet. I could pretty much say the same comments that I've just said for euro dollar, but cable has basically suffered a momentum death, even though we've kind of popped out to new highs. We've corrected, popped, we've corrected again, popped, and each correction has overlapped the previous high. So that's how you know that you are. It's a corrective high rather than a new impulsive rally. This is a corrective B wave top. We haven't had the initial decline yet. It's coming. Here you can see the 3-wave pattern higher in wave B. I'm looking at, again, a wedge rather than ending diagonal. It's kind of, it's an ending diagonal, but it's an expanding wedge rather than usually the contracting wedge is what you get in an ending diagonal. But here we've got wave A up, wave B down. Then we've got 3 up in 1, 3 down in 2, 3 up in 3, 3 down in 4, and then 3 up in 5. So, I'll just wait for that break of support, and that's what I want is that impulsive break of support. The wave A high is what I've been pointing to at 122. We've got a wave 4 low now here at 123.40. So let's see if we break 123.40 in wave 1 to signal wave 1 is underway. Okay, let's move on. This is dollar yen. Dollar yen has not, well, it's given us some indication that the trend is changing here. So far we've had 3 waves up, but I think this does classify as a series of impulse waves at the moment. We had a wave 1 rally, wave 2 decline, looking for a wave 3 rally. That's overall, that's where I stand on the dollar in general. Is a third wave rally should be coming our way, and definitely sentiment suggests that third wave rally is coming our way because everybody hates the dollar again. So that's when you should buy the dollar. Okay. Let's get to the short-term chart and I'll show you what I'm talking about with the series of impulse waves. You've got a possible 5-wave pattern in wave 1, 3 waves down, wave 2. 5-wave pattern again, wave 1, 3 waves down, and wave 2. We haven't confirmed a third wave rally just yet, but let's see if we get. So far, we're turning higher this morning. Let's see if we get a break of 134 again today to suggest that wave 3 is underway, and that's kind of, that's where I've been hanging out this week, is trying to kind of pinpoint the third wave acceleration. We've had a reasonable rally off the low, but no confirmation of a third wave just yet. So let's get to the stock market, the bane of my existence right now. But I can probably, tell you a similar but opposite story for the stock market. Just as the dollar is hated now, and everybody seems to be screaming about the demise of the dollar. Oh gosh, yada yada yada. Demise of the dollar. How China's dumping the dollar, and yeah, China's dumping the dollar, but China borrowed 50 billion from the Fed only a few weeks ago to cover its ass. Hong Kong dollar is about to die. The Chinese economy is collapsing like a lead stone, like a stone. The U.S. economy is holding up. It's turning, but it's holding up so far. We haven't had an indication. We haven't had let's say that free fall moment, that widespread acknowledgement that the recession is here. It's here, but we haven't had that acknowledgement yet. I think the market crash will come first, then the acknowledgement will come. But we haven't had that turn down into a third wave yet. So that's what I've been expecting. That hasn't happened. I take full responsibility for that. I come on every night, and I have to kind of, let's say, I have to give my long-term outlook and short-term outlook every night on the nightly update. So I nail myself to my own cross in that way, because I give people the ability to beat me with my own words. And that's where I stand right now. People are beating me with my own words. That's fair enough. I put myself in that position. It's fine. I still think that this is a 3-wave rally overall. I think we've had a wave 1 decline. I've updated this count this week, obviously. It's gone up by 1 degree, but it doesn't change the underlying, let's say, premise here. A 3-wave rally. It's a zigzag correction. So we've got 5 up in A, 3 down in B, and then we've got this 1, 2 extended C wave. 1, 2, 3, 4. And I think we could be talking about some sort of, it's a standard enough pattern, but it's quite convoluted in how how it's traced out. And I think it's a 5-wave pattern higher. I think it's in wave 5 I'm talking about here. So actually, if I pull this apart a little bit, you might be able to see it a bit better. Here's wave 4, possible wave 4 low. Let's get wave 3 in there. Would be an expanded flat correction wave 4, and then we've got this maybe a wedge into wave 1, and then a running flat wave 2, and then an acceleration wave 3, and 3 waves down wave 4. If you can see that now, we've got wave 1, 2, 3, 4, and now we've got wave 5, which is 5 waves. 1, 2, 3, 4, 5. And all we've done is traded up along this upper trend channel line here. We've popped above a couple of times and then traded back down into the channel. So we popped above yesterday again. Let's see if we trade back down again today. Another point to note about this interesting pattern here. So that's wave 5 pulled apart, possible 5-wave pattern in wave 5. Another interesting point here is that wave 1 of C, you can see there the Fibonacci grid around wave 1 of C, extended into the wave 5. And this morning's high is pretty much pip for pip, or point for point, a match with wave 1. So wave 1 and wave 5 have reached equality. If we go to wave 3, if you get the wave 1 height extended off the wave 2 low, and wave 3 comes in right at the 162% extension of wave 1. So we've got a perfect Fibonacci relationships within the wave C rally. 5-wave pattern, wave 5 equals wave 1, wave 3 equals 162% of wave 1. And if we go to wave A here, let's say the overall pattern, the size of wave A extended from the wave B low, you see the top of wave C has just popped above this week the 162% extension of wave A. So we've got a nice pattern, perfect symmetry within the pattern, perfect Fibonacci relationships within each wave and within the subwaves of each wave, and between, let's say, each wave of the correction itself. I'm just going to say for pig iron, where did wave B correct to? From the wave A high, we had a wave B correction, and the wave B correction bottomed at the 78.6 retracement of wave A. So wave C equals 162% of wave A. Wave B retraced 78.6% of wave A. In wave C itself, wave 5 of C equals wave 1 of C. Wave 3 of C equals 162% of wave 1 of C. And we have overall we have 3-wave pattern, and has topped, hopefully is going to top just above the 78.6 retracement level. So, and it's filled a trend channel. There's multiple levels of relationship here that all point to a corrective nature in this rally, a 3-wave corrective nature. And here I am looking stupid, just calling for the reverse to happen. I'm going to look the idiot until it happens. I'm willing to look the idiot because I'm a bit of a clown jester anyway. So wave 1 down, I remain steadfast in my idea that we're going to see a 3rd wave decline, a third of a third kind of waterfall decline. Let's hope. Let's see. For my prestige, let's say, to save my bacon, let's hope that it happens next week. Okay, let's move on. I'm going to go to gold, another one that you're going to want to kind of crucify me with. The 2nd wave correction has not come in yet. I've updated the wave count. Still calling this a wave 1 rally. We have retraced back into the wave B high here today, or yesterday, basically. I don't know. Go back in my videos. Honestly, I'm going to ask you a favor. Go back to the video from the 10th or the 7th of October last year. So 6 months ago. Go back to that video, and I was right about it was the 7th of October. It was just right about this initial pop higher off the lows. And just look at my comments and tell me that I'm completely wrong the whole time about anything. Because the thumbnail for that video was gold turns bullish finally. That was the 7th of October last year. That's at this point here, 7th of October last year. My thumbnail for the video was gold turns bullish finally. And what's happened? We were trading about 1700, and it's rallied to 2000 now. So stop beating me over the head. That's what I'm pleading with you. There is a correction coming. That's what I'm saying right now. I'm at the exact opposite flip side of that comment right now, 6 months later. I'm exactly where I was at this B wave high, where everybody was screaming at me that this is not a B wave. It's a new rally to new all-time highs. We're going to go to the moon. And what happened? The market fell $400. The market fell $400 in a few months, in 6 months again, probably. So at the wave B high, I was bearish. At the wave C low here, I was bullish. And now I'm bloody bearish again. So maybe I'm the only one that's beating me over the head here. But I feel like, if one person is emailing me, there's probably 60,000 people that want to email. Well, not 60,000. There's probably 60 people that want to email me and call me, tell me that I'm wrong. But I'm going to hold to my conviction here that a serious correction is coming in gold. And don't be surprised if we fall all the way back towards 1700 again, because bullishness has gripped this market now, and it's screaming a high. Call me wrong if you like, but it's screaming a high. I'm gonna go to So anyway, we could call this a couple of ways. We could say that this is. We could say this is wave 1 blue, and we're expecting a correction in wave 2 blue. The alternate account here is that wave 1 in green has just finished, and we're expecting wave 2 in green. If this alternate account is correct, then I think we're going all the way back down to 1700 again in a hurry. So, I'm just saying, maybe I am doubly pinning myself to the cross here again by saying this. I'm giving you a weapon, a stick to beat me with here, that I may even favor this alternate account now. The turn has yet to come. The turn has yet to come. That's the point, I suppose. But I don't think my thesis is wrong here. If the rising trend line here holds, if we bottom out around 1900 or 1880 or something like that, and we rally again, then I think this count will be spot on. But don't be surprised if the alternate count gets triggered. Okay, so let's go to the hourly count here. This is what I'm looking at for this wave 1 rally. We've got wave 3 top, wave 4 low, and then an ending diagonal again. So we've got wave 1, 2, 3, 4, 5. Pretty classic wedge shape into the high. Slow down momentum. You can see on the 4-hour chart we've got this declining momentum for the last almost a month now. So as wave 5 has risen up, wave 501 has risen, the momentum has completely turned off, declined. So expecting at least a 3-wave decline back towards what again? About 1900, 1880. When that happens, then we will look for a possible low. If it plows right down through that again, I'll be changing to this alternate count again. Okay, so crude oil. Here we are. After that gap higher last week, we seem to be closing out this pattern now. This was a few weeks ago or a few months ago, this was the alternate pattern. It got triggered last week or the week before last, I can't remember exactly. But an ABC expanded flat correction wave 2, and we are approaching the high of that again. Let's get into the hourly count. Right, we have a close call here within wave 5 of C. So we've got that 5-wave pattern, wave 1, 2, wave 3 up, and the gap happened within wave 3 of 3. And then we've got a complex correction, wave 4, and then a 5-wave rally off that again. So wave 1, 2, 3, longer wave 4 than I expected, but bouncing again this morning. So we've got possible 5-wave pattern in the bag here, close to being in the bag anyway, in wave 5 of C of 2. So once this tops out, I'll be looking for a reversal next week. We will see how that goes. Go join the nightly updates and you'll see. Okay, here's the S&P. This is the 4-hour count in the S&P. We'll go to the daily count. Now, I'm kind of almost ruling out this alternate count here for the S&P. I think the declining wedge or leading diagonal wave 1 and wave 2 is pretty solid. I think we're probably wave 1 and 2 at one lower degree done, and we seem to be forming a head and shoulders pattern around that lower degree wave 2 here. So again, you can see volume this week. You can see the declining momentum, of course, on the daily count. You can see the volume over the last few days has just been pitiful. It has been next to nothing in terms of volume. The only volume spikes are happening on the declines. That should tell you something. So we have reached a point of absolute complacency. Actually, even worse, we're at a higher degree of complacency and a higher degree of bullish sentiment now than we were at this wave 2 high back in August last year. So this was the wave 2 high from 15th of August last year. You can see we had a nice spike in momentum up to that top, a complete reversal very quickly. But I would urge you to look at the volume figures from that high, that wave 2 high. So we were coming in at, what was that? I can't read the exact figure, but we were coming in quite low on volume. We had declined in volume all the way down on this decline. So, the decline was leading to a complacency. Decline in volume on the rally. So the decline was showing a complacency, forgive me. The volume was still higher than the previous all-time high. So previous all-time highs were coming in about half the volume at the wave 2 high. But now I'm going to show you that volume that we're experiencing trading this week is actually comparable to the volume we were experiencing at the very all-time high back in December 2021. And that should tell you something. We are at a level of complacency here that I don't think we've seen since the high of 2021. That's me. I am built to be a contrarian thinker to my downfall. But anyway, so here we have the wave 1 low back in October, an ABC pattern up, wave 2, possible wave 1 and 2 now forming underneath that, with the expectation that we should fall down into a wave 1 and 2 of 3. So this will be an acceleration into a third of a third, actually, over the coming month or so. And that's where I stand right now. Until that changes, we'll see. Okay. Here is the daily count in silver. I want to just show you to back something up. To back up my comments, my contrarian comments in gold, I want to show you something in silver. Okay. There is still a very real possibility that we are just correcting higher in 3 waves here. And I know I'm going to annoy some people by saying that, but the possibility is, it's a very real possibility. that we have 3 waves up in a trend channel, and this may only be wave B of wave 2. I know that seems impossible. It seemed impossible back here at wave B high that we were going to crash down to $17 again, but that's exactly what happened. It seemed impossible at the wave 1 high that we would correct quite low in the wave 2 rally or wave 2 decline, but that's exactly what happened. And here we are right now at a very extreme high in sentiment, extreme bullishness, extreme highs in momentum that we haven't actually seen. We haven't seen a peak in RSI like this since the third wave high way back in 2020. So that third wave rally in 2020, that's the last time we saw this sort of rally or sort of high in momentum. Okay, so will this get punished quite quickly? That I don't know. I'm looking at the possible of a wave 1 of 3 top coming in right now. You can see I'm expecting a decline in wave 2. I still cannot rule out that trend channel, 3 waves up trend channel on the 4-hour count. But, let's say for pig iron, I'm going to go with the prevailing sentiment here. I'm going to call this wave 1 of 3, and I'm expecting a decline, back towards about $20 again in wave 2 of 3. Here's the hourly count. I gave an expanded, let's say, version of this 5-wave rally up here this week or a couple of days ago. We've got wave 1 and wave 2. We've got 5 waves up in wave 3, a small correction wave 4, a 5-wave rally in wave 5 with an extended 5th wave in wave 5 of 1. The extended 5th wave of wave 5. If we didn't get an acceleration within wave 3, which we really didn't, we got a nice gradual rally, but we didn't get this kind of acceleration within a third of a third. That has been reserved for the 5th wave extension. So we've got a 5th wave extension instead of a 3rd wave extension. It's pretty bog standard. And I think at this point it probably should show us that you're way closer to a top here than you are to anywhere near a further extension in this rally. So that's what I'm going to stick with. Come against me if you wish. That's fine. I don't mind. Here is, God, quite subdued today, actually. Forgive me. Here is Bitcoin. Again, the 4th wave rally it's just doing what it's doing. The wave C of 4 has come higher than probably most people expected it. We've got a 5-wave pattern, a possible 5-wave pattern in wave C. Pretty much done. Let's go to the hourly count here. The hourly count shows a triangle within a 4th wave over the last, let's say, 2 weeks or so, and a pop higher in wave 5 of C of 4. So again, much like silver and probably much like gold, we're topping out. We're topping out here again. So we should see a step down into an impulsive decline next week, hopefully. Again, there's another stick. I've just given you another stick if you want to beat me with that too. Okay, so the 4-hour count in Nasdaq. Not quite sure if the top is in for the Nasdaq yet. It's possible that it could be, but here we have a 2nd wave rally. It's probably a triple combination correction. We've got 3 up in A, possible 3 down in B, and then a possible 3 up in wave C. So 3-3-3 combination correction. We're close. We're coming close to a previous 4th wave high. You can see that looming 4th wave high from back last August. Again, traditional target for a 2nd wave correction. The first major high of the previous decline. So that 4th wave high had, I suppose, been showing a target about 13,700 for the Nasdaq. We'll see whether we get there or not. I'm not sure. We have, again, on the 4-hour count, continuous decline in momentum as this rally has gone on, and probably got even worse this week, even though we are standing at 6-month highs here. So Second wave correction, pretty close to done here. We shall see. The reversal decline has not happened. And until that happens, then I am just the idiot on the outlying. I'm the outlier idiot that just kind of points to the sky and says, "Hey, the sky's falling." Chicken licking. I'm chicken licking, pointing to the sky again. So, and again, I might end this video with, even though I'm full of bad news on the market, I'm actually quite a hopeful person, full of good news of eternal life. I don't think this life is all you have. This life is not even why we're put here. There is an eternity coming, and we stand on one or another side of that eternity. You either stand covered in the blood, or you stand paying for your own sin. You stand in the camp of the adversary, or you stand in the camp of the righteous. And I am not saying that I am righteous. I am not. I am standing in the camp of the righteous, and the righteous one is the Messiah, is Yeshua, Jesus, who died on the cross for our sins, and he rose on the third day, and he defeated death, and he paid for all sin. And all you have to do is walk from the headship of Adam, walk from your leader, who is Adam, who led us into death, and walk into the light. Your new leader, the Messiah, who leads us into light, into life. And that's it. I speak a lot about markets. I speak a lot about economics. I speak a lot about trends, reversals. This is the ultimate trend, and the end of your life is the ultimate reversal, and it's also the ultimate takeoff if you want it to be. Go ask God. He's not going to refuse an honest question like that. Who's the Messiah, and should I follow him? That's I would urge my Jewish friends to do that. Although they've probably all clicked off by now because they don't listen to this. And they won't listen to me. They won't. Maybe prove me wrong, hey? Email me if you're Jewish and you're still listening. Email me. That's it. I don't have much else to say. We were all born under Adam. We have that, failing within our DNA. And the Messiah will make it right. If you just walk from death into life. Believe in the Lord Jesus, and you'll be saved. Okay. See you tonight for the nightly update. See you next week, if I'm still alive. Bye-bye, YouTube land.